let's take a live look now at the opening trading of today. I love this shot. This is the floor behind us, guys. I love that we can see where the markets are right there. The Dow Jones slightly up. Joining us this morning to discuss is Wall Street Journal investing columnist Jakab. Spencer Jakab. Thank you so much for joining us, Spencer. So let's begin where
Thanks.
we have, yes, thank you so much, where we have many days with oil. Oil prices are rising again today. But at this point, are we seeing investors basically just accept that these high prices aren't going anywhere? Or do you think that there's still a little bit of potential for, basically, is everything already baked into these prices, do you think?
No, I don't think it is. I think it's slowly sinking into the public how big this disruption is because, look, even if peace broke out today and you had a resolution of all these things, it would take at least a month to restart most of the shut-in production in the Middle East. The effects of the blockage so far would, last well into later this year. And there's very little possibility right now that the blockage and the attacks on vessels are going to stop. So today's a bit of a schizophrenic day because you have stocks up sharply at the open, but you also have oil up. Typically, that's been the reverse. They've gone in opposite directions depending on how optimistic people were about an end to the hostilities.
The national average for a gallon of gas is about $4 right now. In California, where it's usually more expensive, let's see, it's almost up to $6 a gallon. How long until consumers really start to express their frustration and see the deeper financial pinch from the higher cost of fuel everywhere?
Well, so you're talking about gasoline prices in the U.S., which are definitely an issue in the U.S., and people are writing to their congressmen and getting upset about it. The deeper issue is with things like diesel and jet fuel, where you will probably the middle of next month start to see localized shortages, depending on how far you are from the Middle East and how dependent you are on the shipment of refined products or the shipment of crude from the Middle East. There'll start to be actual shortages. And of course, prices will rectify that. The prices will be high enough that airlines will start canceling flights they already have. Vessels will not sail or sail much more slowly, bringing goods back and forth from Asia and from Europe. And so that's where it's going to really pinch and show up because you've taken almost a fifth of supply out of the market. There has to be an adjustment somewhere. Gasoline prices are as painful as they are to pay $7 a gallon in California. That's the least of our worries. If planes can't take off from San Francisco because they're not receiving jet fuel shipments, that's going to be a kind of more of a wake-up call for people.
And Spencer, to your point on diesel, its average right now is $5.40 a gallon, and for context, a year ago it was $3.60. So that's certainly much higher.
It is, and that's a part of the price of everything that we consume. You might not have a car that burns diesel or a truck that burns diesel, but the truck that brought your groceries to the grocery store used diesel, the vessels that carry the world, the trains. So those things, it's more difficult to quantify. You don't see it on a gigantic sign on a street corner near your house, but it's more important in a way because it's the part of the price of so many things. And then let's not even talk about fertilizers. A large part of the world's fertilizer supply came to the Middle East. It's spring planting season now, so that's going to affect the price of all kinds of grains and crops and meat several months from now.
All right, Spencer Jakab, great to have you here this Monday morning. Hope to see you again soon.
Thank you.